Building wealth has become a key pursuit for many people in today's world. Whether through side hustles or real estate investments, individuals are constantly seeking ways to create additional streams of income, secure their financial futures, and ultimately achieve financial independence. But if you were to compare side hustles and real estate as wealth building strategies, which one actually builds wealth faster? That is the question we need to delve into today. First, let's take a step back and define what we mean by wealth building. Wealth building involves growing your assets over time, whether through income-generating activities, investments, or business ventures. To achieve this, one needs to create income streams that provide positive cash flow and the ability to reinvest or grow your capital. When you talk about side hustles, you're referring to additional work or business ventures people take on outside their primary employment to earn extra money. Side hustles could be anything from freelancing, consulting, driving for ride-sharing services, or running an e-commerce business. They often require time, effort, and skills that are supplementary to one's regular job, but they offer the potential to increase one's income on a regular basis. On the other hand, real estate has long been considered one of the most reliable ways to build wealth. Real estate investing involves buying, owning, and managing properties with the intention of earning income or capital appreciation. This could mean buying rental properties, flipping houses, or investing in commercial properties. The key factor with real estate is that it is an appreciating asset, and often you can leverage other people's money, like loans or mortgages, to maximize returns. Both side hustles and real estate come with their advantages, disadvantages, and different approaches to growing wealth. To compare them, we need to analyze various factors, including income potential, time commitment, risks involved, scalability, and long-term value. This analysis will give us a clearer picture of which option might build wealth faster for different types of individuals. Income potential. When it comes to earning money quickly, side hustles have a clear advantage. Side hustles can generate a steady stream of income, sometimes within days or weeks of getting started, depending on the nature of the hustle. For example, if you're a freelance writer or graphic designer, you can start getting paid after completing your first project. Similarly, if you're running an e-commerce store, you can start earning revenue soon after setting up your shop. For many people, side hustles can be a great way to supplement their income, and the faster you put in the work, the faster you see results. The income from a side hustle is often more immediate and predictable, which can be motivating for those looking for quick return. Real estate, however, often takes time to build momentum. While it is possible to generate income from rental properties fairly quickly, if the property is already rented, the process of purchasing, rehabbing, and renting or selling a property typically takes longer. Moreover, it requires a significant upfront investment. Real estate can provide a high return, but the process of seeing that return can take months or years. For instance, flipping a house might take several months to complete, and the profit comes only after the house is sold. So if you're someone who's looking for quicker, consistent cash flow, side hustles are likely to build wealth faster in the short term. On the other hand, if you're willing to put in the time, effort, and money up front, real estate can lead to more substantial wealth in the long run. Time commitment. Time is another critical factor in wealth building. For side hustles, the amount of time you commit directly correlates with the amount of money you make. Most side hustles require active involvement. The more time you spend working on your side hustle, the more income you're likely to generate. However, this also means that your income has a limit. There are only so many hours in the day. In some cases, a side hustle can turn into a full-time business if you scale it effectively, but this often requires a significant investment of time and energy. In contrast, real estate investing generally demands less ongoing active time once the property is acquired and managed. A property, once rented, will typically generate income with relatively little day-to-day effort, although property management can require attention. If you hire a property manager, the time commitment decreases even further. Real estate can also be more hands-off once it's set up, making it a passive investment that requires less ongoing effort. However, the time it takes to identify and secure profitable properties cannot be overlooked. Additionally, when you flip homes or buy commercial properties, there can be long stretches of time where you're actively working on the project. If you're looking for a side hustle that you can scale up quickly while still being involved hands-on, side hustles are an excellent option. However, if you prefer to make a big initial effort and then spend less time managing your wealth, real estate may offer you the ability to step back and enjoy more passive income once you've set up your investments. Risk factor. Both side hustles and real estate come with risks, but the nature of those risks differs. For side hustles, the risks are often financial, but usually lower in terms of capital investment. Since most side hustles require little to no upfront investment, the financial risk is relatively low. However, the risk comes from time and effort. If a side hustle doesn't pan out, you may have spent time and energy for little to no return. Additionally, some side hustles can be competitive, meaning it may take time to build up a customer base or reputation before you can make significant income. Real estate, on the other hand, involves more significant financial risks. If you purchase a property and the value declines, or if you're unable to rent or sell it, you could lose money. Moreover, managing properties can involve unexpected costs such as maintenance, repairs, or tenant issues. On the flip side, real estate historically appreciates over time. So while there is short-term risk, the long-term rewards are often higher, especially if you're able to invest in high-demand areas. If you're risk averse, side hustles may seem more attractive because they allow you to dip your toes in and test out ideas without significant investment. Real estate, however, might be better for those who are willing to take on higher risks for potentially larger long-term rewards. Scalability. Scalability is one of the factors where real estate often has the edge. Once you acquire a property, scaling your wealth in real estate can be as simple as acquiring more properties. The larger your real estate portfolio, the more rental income you can generate, or the higher the potential for property appreciation. Additionally, with leverage, using borrowed funds, you can purchase more properties than you could afford with your own capital, further increasing the potential for wealth building. Side hustles, while potentially scalable, often hit a ceiling based on time and effort. You may be able to increase your income by taking on more clients or customers, but there are only so many hours in the day. Some side hustles, like running a small online business or offering a product, can scale faster than others, but you may still need to hire employees or automate systems to take things to the next level. This requires a different kind of effort and investment, and there's no guarantee that scaling a side hustle will result in exponential growth. For those looking for a more predictable long-term path to wealth, real estate offers the scalability that many side hustles do not. However, both side hustles and real estate can be scaled with the right strategies and effort. Long-term wealth building. While side hustles can be a great way to generate immediate income, the real wealth building potential often lies in long-term investments. Real estate tends to be more lucrative in the long run. Properties tend to appreciate in value over time, and rental income often increases as the cost of living rises. As you build a real estate portfolio, you also build equity in those properties. This equity can be leveraged for future investments or can be sold for a significant profit down the line. Side hustles, on the other hand, may not offer the same long-term wealth building power unless they are scaled into full-fledged businesses or create passive income streams. For example, if you're running an e-commerce store and you successfully sell the business, you can earn a large one-time payout. However, the ongoing wealth building potential is often more limited compared to real estate, which appreciates and can generate consistent income over time. Conclusion. Both side hustles and real estate have their strengths and weaknesses when it comes to building wealth. If you're looking for quick, consistent cash flow, side hustles are likely to be the faster route. They offer the flexibility to earn money relatively quickly with a minimal upfront investment, and you can build and scale them to increase your earnings. On the other hand, real estate typically requires a more significant upfront investment, but it offers the potential for long-term wealth building through both appreciation and rental income. Real estate can be more passive once set up, and with leverage, it offers the potential to scale your wealth significantly over time. Ultimately, the choice between side hustles and real estate depends on your goals, risk tolerance, available capital, and how much time you are willing to invest. Some people might find success in combining both, using side hustles to generate capital for real estate investments. Others may choose to focus on one over the other based on their preferences and circumstances. What's most important is that you start somewhere and commit to the process of building wealth over time, whether through side hustles, real estate, or a combination of both. When it comes to income potential and speed, side hustles generally provide quicker, more immediate financial rewards. The beauty of side hustles lies in their ability to generate income almost as soon as you start. For example, if you begin freelancing, working as a virtual assistant, or offering tutoring services, you can often secure your first clients or customers within days or weeks. The cash flow is typically more predictable because you're getting paid for the hours or projects you put in. The key here is that side hustles allow for rapid monetization, especially if you're leveraging skills or services that are in demand. There's a clear cause and effect relationship. The more time and effort you dedicate, the more money you make. This speed makes side hustles especially attractive for those looking to boost their income quickly. Whether you want to pay off debt, save for a vacation, or simply increase your disposable income, side hustles can fill the gap fast. Additionally, many side hustles can be started with little to no investment. You don't need to buy a property, secure financing, or deal with long approval processes. You just need to start working. This ease of entry and rapid income potential are huge advantages when compared to other wealth building methods. However, this immediacy comes with its limitations. Side hustles are often limited by the time and energy you have to dedicate to them. Even if you manage to scale your side hustle, you're still directly trading time for money. You can't create infinite hours in a day, and without a scalable model, the income growth tends to plateau after a certain point. In contrast, while real estate might take longer to get going, the income potential grows more significantly over the long term with less ongoing effort. When considering time commitment and scalability, side hustles and real estate differ significantly in terms of the level of ongoing involvement and the ability to grow over time. Side hustles typically require a high level of active involvement, particularly in the early stages. Whether you're freelancing, driving for a rideshare service, or selling products online, your income is directly tied to the amount of time you can put in. This can make side hustles rewarding in the short term, but also exhausting, especially if you're juggling them alongside a full-time job or other commitments. The more time you spend working, the more you can earn, but this also means that there's a cap on how much you can grow your income. After a certain point, scaling a side hustle often requires more than just your personal time. It might involve hiring others, automating processes, or creating systems to manage the workload. This shift to a larger scale operation can require significant investment and effort. And even then, the growth potential may still be limited by the structure of the side hustle itself. Real estate, by contrast, offers a different kind of scalability. While the initial investment in a property or portfolio of properties requires time, effort, and capital, the ongoing management can be more passive, especially if you hire property managers or automate certain processes. Once you own a property, it can continue to generate rental income with less daily attention, allowing you to scale by acquiring more properties without a proportional increase in time spent. Real estate allows for long-term wealth building because you can grow your holdings over time without the same level of hands-on involvement as a side hustle. With leverage such as mortgages, you can amplify your returns and increase your property portfolio more quickly than you might with a side hustle, which is typically limited to how many hours you're able to work. Thus, real estate offers greater scalability in terms of wealth accumulation over time. When it comes to risk and long-term rewards, side hustles and real estate present distinctly different opportunities, each with its own set of challenges and benefits. Side hustles generally carry a lower financial risk because they often require minimal startup capital. You don't need to invest large amounts of money upfront. Many side hustles can be launched with little more than a laptop and some basic skills. The primary risk with side hustles lies in the time and effort invested. If the hustle doesn't take off or fails to generate consistent income, you may find yourself having spent hours without seeing a return. Additionally, some side hustles, particularly those that involve competition, like freelancing or e-commerce, can be unstable or subject to market changes. However, the financial risk tends to be lower than that of real estate because there's usually no debt involved, and you're not committing to a large capital expenditure. Real estate, on the other hand, typically involves a much higher degree of financial risk. When you purchase property, you're often committing significant capital, whether through savings or loans, which makes it a more substantial financial risk. Real estate investments are subject to market fluctuations. Property values can go up or down depending on location, demand, and broader economic factors. Furthermore, there are ongoing expenses such as property taxes, maintenance, insurance, and potential vacancies, which can affect your cash flow. However, despite these risks, real estate has historically provided long-term wealth building potential. Over time, properties tend to appreciate in value and rental income can increase with inflation. As you pay down your mortgage, you also build equity, which can be leveraged for future investment. This makes real estate a powerful vehicle for long-term wealth accumulation, especially for those who can afford to weather short-term fluctuations in the market. Ultimately, side hustles provide quicker, more immediate rewards, but come with limited long-term wealth building potential, whereas real estate can involve higher risks upfront, but offers greater long-term rewards as assets appreciate and generate passive income over time.